What is up, guys? Chimp here. I want to just do a really quick market update, given we had such a large move since our last video. And so, start by really quickly talking about equities, really quickly talking about gold, just for a minute or two, and then we'll go straight into Bitcoin. So, mentioned in my last video, um, if you're not able to predict, if you have a variable that's more noisy than another variable, like you shouldn't use it as a way of prediction. But you can always look at those two variables and be like, okay, one thing is outperforming the other, and so forth. So when we had that initial Trump tariff pause talk, the Nasdaq spiked from like 17.5 to 19,250, and at that point, Bitcoin I think went to like 83. And we had a secondary, like, quote unquote, Trump pause in the last day or two. And now Bitcoin's at 93, right? And meanwhile, the Nasdaq's actually lower. So these are the sorts of things you want to look for in terms of, like, hey, structurally, maybe something has changed in this market. So that's something I'm thinking about. I'm not trying to predict the Nasdaq. Is it going to go to 21,000 or is it going to go back to 17,000? I don't know. I don't have that capability to make that prediction. But I do know that despite what's going on in TradFi, there's this underlying current of strength in Bitcoin. Now, we talked a lot about gold, and gold's been selling off a decent amount since the Trump, tariff pause and whatnot. It's still up a ton, right? Like, there's no reason why this quote-unquote de-dollarization narrative is over. I don't know how to predict what gold is going to do per se, but I can say that what this is showing you is that people around the world want to own assets other than US equities and US based assets. So with gold going up, that's just a telltale sign of that. Okay, now let's talk about Bitcoin, which is where I really wanted to spend a lot of this video. And we talked in our last video, last video was right around here. And I mentioned that I thought we were going to go up. I said that there was a possibility that we flush first and then go up, but I was leaning towards up, just straight up. And that's basically what we got. We had this like 9 months, or not 9 months, sorry, 3 months of like really suppressive price action, right? You could almost like draw like this like suppression, like TWAP or however you want to call it. And the moment it cracked, like the market just popped, right? So this like in some ways we got like classic seller exhaustion. We had 3 drives down. We had multiple drives into this liquidity zone where like we had prior like this, it's almost like the cleanest bottom you can ask for. Like we had this prior range here. Like we basically bounced off the range high. The prior range highs turned into our now range lows. We ran out of sellers. Price sort of came back, stalled, and now we popped. And so the question is, my drawings here are going to be like horrible. The question is, what's next? And the first thing to realize when you have a move like this that's so sharp, right? Like Bitcoin basically popped 10%, is you don't really have many leveraged longs that are vulnerable at this point. This is actually like a um, classic thing that I've noticed recently, and it's something that I've tried to be very cognizant of, which is, hey, just because you pump doesn't mean you have to auto retrace. And in a situation like this, where you're coming off of multiple months of seller exhaustion, and the move is pretty sharp, like think about it this way: are there people that are still long from here? Yeah, maybe, or here, maybe. But like for the most part, you haven't had much time up here to build like longs that are huntable. So like, what's one reason we could go down? It's because so many people get long that those longs become huntable, and so they can get stopped, etc. We haven't had any time for that to happen. Like this has literally been what 24 hours or so. So to me, like there's actually probably very little derivatives positioning that's at risk of like nuking us. Um, when you sit at elevated prices for a long period of time, that's when you sort of get like the ability to nuke, right? Like for example, um, in hindsight, when you have a situation where like, or actually, let me show last year because I think it's more clear. But when you have a situation where you're sort of sitting at like the range highs for weeks, or this is another classic situation, right? Like May 20th basically to like June 12th, right? Like 3 weeks of sitting in this range, you build up enough positions to where you can go down. But at the current moment, or even here, right? Like another good example, like you sit at these levels from like July 15th to August 2nd, like 2-3 weeks. You build up enough positions to be able to hunt to hunt to the downside again. I don't think we've seen that yet, and so to me, like this is like my base case right now is minimal downside. I think that the market's not going to give people like this dip that they want to buy. Like I don't know what level people are looking to buy. If I had to guess, 89, 90, 91, maybe lower than that. I don't know. I don't think that's going to happen. I think dips are going to be shallow. Like we got a dip today, right? It was at 92. I, if that stays at the low for a while, that wouldn't surprise me. If we get maybe a wick to 91 or something, maybe that's all you get. I don't know. I don't think that this market is gonna just sit here and roll over tomorrow. Like that's not my base case. Obviously, it could happen. It's crypto, right? Maybe the spot bit totally dries up. It could happen, but I think the market is so deleveraged right now that like we're coming up. Sometimes I talk to my friends about this, like a confidence cycle. Confidence was sky high at 110. When we spent over a month, sub 90, right? Like late Feb to late April, like basically 2 months, confidence went to shit. No one's long anymore. So, like, actually, if I really have to think about this, my base case is like we could chop for weeks, build up positions, and then we could hunt lower. That's a possibility. But this could just also be like the healthy reset we needed, and now like shit just starts to pop off again. So those are like my two main base cases, and like I would assign a lot lower probability to, hey, in 3 days we're going to be trading at 84K again. I think that's a bit of a lower possibility in my mind. Let me just show you guys a couple things, and then I want to talk about alts too. So ETF. Sometimes I hear people talk about, oh my god, ETFs outflowing. The way I like to think about the ETF is like X money comes in, a lot smaller percentage of that is going to come out. So from mid-October to like February, it was basically up only, right? So we went from like 20 billion to 40 billion. And then we had like a 5 billion in outflows. The question is like, is that a reasonable amount? And I think like using this baseline of like, hey, 20 to 25% of the money came out of this thing, like probably done outflowing. Like that's the way you want to think about this. Like the ETF basically is going to give you more upside demand than it's going to give you downside potential. Like basically, the ETF is like this thing that's going to push prices up. Occasionally, some air is going to come out of it, but once that air comes out, there's going to be very little air left to come out. So like, and that's what we're seeing, right? Like we had a long period where it was sort of outflows and then chopping a bit, kind of similar to like August and September of last year. And now like we're starting to see these big inflow days again. And like it wouldn't surprise me if Bitcoin spot ETF cumulative flows like end up going to 50 billion, 60 billion in the coming months, especially if price starts to like also go up. Let's also look at two other things here real quick. One is CME open interest, which is a very interesting chart. This is like a sign of leverage, right? Like at the peak, when you look at CME open interest, it was like at 210K. We're sitting now at like a meager 140K. Not that many people are leveraged. Like once we had that flush in February, CME open interest like completely wiped out. And so that's why like the market, even though it dipped sub 80, auto rebounded because there wasn't much leverage in the market to cause this like continuous cascade. And lastly, let me talk a little bit about open interest. So we talked about open interest in the last video when we were here. Find it right here. And I said, hey, maybe this open interest can wipe out, and so forth. What did we actually end up seeing? And I think this is structurally like very bullish, is we actually wiped the open interest on the way up, right? You basically had people shorting this entire move. And like, look, already a lot of that a lot more open interest came out just on a micro dip. So like, when you really think about it, this market does not have much leverage in it. And until that leverage rebuilds, like downside risks pretty limited. Like, can we chop? Can we trade back below 93, 100%? Is there a world where we trade back to 85 or 82, 100%? I think like that world where we dump $10,000 has like a lower chance of materializing in the next week than a world where we're chopping or maybe even grinding higher again. And lastly, I don't have it here, but like we had that news about Cantor Group trying to do like another Sailor, like basically become like a Sailor 2.0. Look, I'm not surprised, right? You've had all these Sailor copycats, and at some point these Sailor copycats are all gonna blow, right? Or not all. Sorry, I shouldn't say all, but there's a chance that some of them start blowing up. But we're nowhere close to that stage yet. Like this could be a year from now, it could be 3 years from now, it could be 5 years from now. But I don't think we're at that stage where these Sailor copycats are going to blow up tomorrow. And so like though as frustrating as it might be watching from the sidelines, like that's the reality of the market we're in, right? So you kind of have to like either accept that or sit on the sidelines and watch crypto prices go up. Last, I want to talk about alts. And typically speaking, I might view like, hey, alts are pumping a lot, like this is, kind of bearish. But I feel like, first of all, like they're barely pumping. Let's, make sure we acknowledge that, right? Like Solana pumped from 100 to 150. Its peak was 300. Solana was at 150 when Bitcoin was at 60K. Bitcoin's at 90K, right? So yes, they've pumped, but like I think what's really happened is you've had a lot of structural sort of shorting that's been going on in these coins, and that's sort of been what led to the majority of these upside moves, rather than like, hey, everyone's been getting max long. Um, and again, like look at something like ETH, right? Like, and I want to make a video where I talk a little bit more about the ETH bull case, but I'll do that at a later time. But look at something like ETH, right? Like, wow, ETH pumped from 1400 to 1800. Wow, okay, like it was over 4,000, right? ETH was at 1400 when Bitcoin was at I don't even know what Bitcoin was at this point, like in the 20s or like low 30s probably. So again, like, yeah, these things are up. But are they up a lot? Not really. Like there's a couple exceptions, like Farcoin. Okay, Farcoin's at 112. It's a one-off meme, right? Look at other memes, right? Look at Pepe. Like a lot of memes aren't up, right? So again, these are sort of considerations and things to think about in the sense like alts are up. There's a couple that are up a lot more, like Fartcoin, but there's a lot of them that are just not up much at all. And I think the narrative that like, hey, a lot of people were just structurally super short these, and those shorts unwound, makes a lot more sense than like, hey, everyone's giga leveraged now, and now it's time to hunt them. Like, I think that's a lot less likely. Um, like even look at something like Trump, right? Like I've talked to people where they were like, hey, like the way to make up for lack of volatility is to up the leverage on shorts. And like you get one announcement and you get a squeeze. To me, like shit like this is more of a, hey, there could still be some mania left. I shouldn't say there should be some mania left because that sort of implies that it's all over for Bitcoin. But it sort of implies to me that like, if you're thinking more about innings, we're not in inning 8, right? Like maybe we're in inning 3, right? This is sort of like that. The market has a lot of pent up energy. People are sick and tired of trading this down only market for 3 months. Like the will to ape, right? That's what I want to call it. The will to ape is there. When you have months of down only and people get a glimmer of hope finally, like the will to ape returns. And that's what I think has really happened. So I didn't want to make this too long of a video, but I just wanted to post a quick update, or just giving my thoughts. And we'll see what ends up happening. But anyways, guys, really appreciate it. If you enjoy it, subscribe, like, and leave a comment. And until next time, take care, guys.